Hello guys. Today we will be learning about the basics of tax planning and payroll journal, how payroll journal is being posted in the books of accounts and how tax planning works. So here in front of you in my screen, there are tax rates for 2024 and 25 and also NIC rates. And here are the types of NIC such as class 1 employee, class 1 employer, class 1A, class 4. We will be looking forward to what NIC is, what pay is, what pension is, what is a student loan, how payroll journal is being posted, and about such a basic tax planning that how much of amount we can get tax free in the UK. Okay. So moving forward to the next sheet, which is for NIC. So what is NIC? NIC is like a social security tax in the UK. It's type of a tax that workers and employees pay to the UK government. So you will be having a question that why is NIC paid? Because due to state pension, which gets a benefit after retirement, for unemployment benefits, for maternity leave money, for sick leave, for NHS, which is healthcare funding. Now, who pays NIC? Employees, like salaried workers from their salary, or employers, which are companies on top of employee salary. And also self-employed people also pay NIC based on their profits. In India, we have EPF and ESI. What is EPF? Employee Provident Fund. And what is ESI? Employee State Insurance. Similarly, in UK, we have NIC for that. Okay. So here are the types of NIC. What are the types of NIC? Firstly, class 1 for employees like salaried workers. Who pays? Both employee and employer. Both contribute towards class 1 NIC. Okay. Now, class 1A and 1B for benefits given by employer. Who pays? Employer only. Next, class 2 for self-employed, which is flat weekly rate. Who pays? Self-employed person. Class 3 is voluntary contribution, and anyone who wants to fill gaps in their NI record can fully pay for pension eligibility. Okay. For class 4 NIC, also self-employer pay. If a if a person is self-employed, they pay based on their profit, class 4 NIC. These all have their own threshold limits, which we will be talking this about later in detail. Now we will be moving forward to what PAYE is. PAYE stands for pay as you earn. In India, I guess you have heard about TDS, tax deducted as source. Similarly, in UK, it is pay as you earn. It is the system used in the UK to collect income tax and national insurance directly from an employee salary every month. Now, why is pay useful? You don't need to pay tax separately. It's automated. So no need to remember due dates. Ensures the government gets regular income. Okay. Now moving forward to what pension is. Pension. A pension is a money you get regularly after you retire. So you can live comfortably even when you stop working. And how does a pension work in the UK? You and or your employer put a little money aside every month. This money is saved in pension fund. After you turn a certain age, usually 66 plus, you start getting monthly payments from this fund. In the UK, there is a body known as NEST. NEST is a National Employment Saving Trust, which is a government-backed workplace pension scheme in the UK. And employees, employers, and even the government via tax relief contribute to it. Here's the link for the NEST pension organization. And while performing live jobs and the description for the pension payments, you always get the description named as NEST. Here is how Nest website looked like. Now moving forward to a term which is a student loan. Now, what is a student loan? A student loan is money borrowed from the UK government to help students pay for university or college. For tuition fee loan, pays for your course fees, or maintenance loan helps with living costs like food, rent paid to you. So, this is a student loan, which is also included in the payroll. How payroll journal works. Payroll journal worked as we debit the gross pay, we debit employer NI, we debit employer pension, we do credit pay and NI liability, and we do credit pension liability, and we do credit wages payable. So this is the payroll journal, which is also helpful for your interview preparation at KPOs. This is a basic questions which is being asked in the KPO, that how payroll journal is being recorded in our books of accounts. So here I have an example for you guys to understand the practicality of how payroll journal is being posted. So here is the payslip for a demo client payslips. So it is a payslip for a full year. So the gross pay amount is 12,487. What is employer NI here? Employer NI 217.9, and employer pension 54,687.42. What will be we will be including in pay and NI liability? All the terms such as firstly pay, which is similarly such as TDS, which is here 250.60, plus employee NIC, which is 85.20, plus employer NIC, which is 217.90. Now moving forward to pension liability. Here we will add on employee pension plus employer pension. Employee pension is 249.88, plus employer pension is 54,687.42. Wages payable is always our net pay, which is 11,901.32. Here you can see our total is equal for the journal, which does mean our journal is correct. So this is the payroll journal which is being posted in the books of accounts of employer. Okay. Now moving forward to a basic tax planning. In the intro tape, we have mentioned the threshold for NIC as well as for income tax and for dividend rates as well. You can see that for the basic rate, for income tax till 37,700 pound, the basic rate band threshold is 20%. On the other hand, for the dividend rates, it is just 8.75%. So what is more beneficial here to take? Rather than taking salary and paying tax at 20%, it is highly beneficial to take dividends from a company and pay tax at 8.75%. But, but, but here you need to remember that dividend are not deductible. Companies pay corporation tax before paying you dividend. Okay. But salary is deductible for a company. So here I have taken an example of my name only, Rahul Makija Payslips, for the tax year 2024-25 from April 2024 to March 2025. For a sole month, I have been withdrawing £758 monthly, which total comes to £9,096. Here I'm not paying any pay. I'm not in a threshold category for NIC as well. And there is none student loan and employer pension or employer NIC, just a gross pay, which is similar to my net pay. So here my payroll journal will be gross pay debit, which will be £9,096. And we will credit wages payable or net wages. So this is the payroll journal for our period, which we will be posting in our books of accounts. So here in this case, firstly, we are withdrawing a salary for the year is 9,996. We do get a personal allowance of 12,570 pounds. Okay. So from which we have used 9,096 and we are still left with 3,474 pound of our personal allowance, which we can use for the tax free withdrawals, okay, from our company. So what are the benefits here? It is below the employer NI threshold, which is 9,100. No employer national contribution, no employee national insurance, still counts towards your state pension. Also gets you corporation tax relief as salary is deductible, but dividend are not deductible. Remember that dividend are not deductible. Companies pays corporation tax before paying you dividend. So first 3,474 pound of dividends will get you covered 0%, 0% covered by remaining personal allowance, and next £500 you can get also as a dividend allowance, which is dividend nil rate payment if your income is in basic rate payment. So for the remaining amount till 37,700 of dividend, which is taxed at 8.75%, rest you can get as dividend from the company. Okay. So here it was a short video to make you understand how payroll journal is being posted and what are the options to withdraw money from our company, and how through tax planning perspective we can, how much of salary we can withdraw and how much of dividend we can withdraw, so that will be a tax free amount. So this I have explained in this video, and the end conclusion is, want more smart tax planning hacks? Follow our YouTube channel ACCA for expert tips. Comment below if you want more interesting tax hacks like this. We have got plenty coming your way. And don't forget to comment your preferred language of for our upcoming videos, such as English, Hindi, or English. We really want to know what is your preferred language. Okay, signing off. See you soon, guys.